All right, welcome back, folks. Just breezing through the hour here, and the markets are still under attack. We are under siege, folks. Aside from the bubble in the stock market that's been building for some time, Russia decides to get into a price war on oil with OPEC, and the exponential explosion is really having a significant effect. Today, Dow down 1,500, off its lows of the day, about 2,100. And you know me, I'm sitting up here every day on Liquid Lunch with the Trump pen. I got my Trump jacket. I'm all Trump all the time. The one place where I don't agree with him is when he starts to try to put pressure on the Federal Reserve chairman, because I think he appointed the guy and he should let him do his job, but he continues to do that, which I don't like. And I got to agree with him once more, because for some reason, he thinks this is not a financial crisis. Take a look.
Not a financial crisis. This is just a temporary moment of time that we will overcome together as a nation and as a world. However, to provide extra support for American workers, families, and businesses, tonight I am announcing the following additional actions. I am instructing the Small Business Administration to exercise available authority to provide capital and liquidity to firms affected by the coronavirus. Effective immediately, the SBA will begin providing economic loans in affected states and territories. These low-interest loans will help small businesses overcome temporary economic disruptions caused by the virus. To this end, I am asking Congress to increase funding for this program by an additional $50 billion.
Well, if you think this isn't a financial crisis, you're not looking at your portfolio, because we are in crisis mode, folks. And the one man who's been saying this for quite some time, legendary, Dr. Murray Sabrin, joins us now. He's a professor of economics at Ramapo College in New Jersey. He's also the author of the book, Why the Federal Reserve Sucks. And doctor, I mean, this is a financial crisis at this point, and it's been brewing for quite some time. The coronavirus was the spark, but we've been hiding a lot under the rug, haven't we?
Well, this is why I wrote the book. The Federal Reserve is the engine of inflation, the creator of bubbles, and what the Federal Reserve essentially does is distort the economy by boosting prices in real estate, by giving us low, unsustainable interest rates. And candidate Trump in 2015 and 2016 recognized this fact. And ironically, he wants the Federal Reserve to blow up the bubble even more, because the Federal Reserve lowered interest rates last year when they were raising interest rates from 2015 to 2018. And we saw what happened in 2018. The market went down 20% in the fourth quarter. We're seeing the same thing now. Now, I don't know if this is the bursting of the bubble that will take us down 50, 60% like it did in 2008 when the market was down 50%, or this is just a temporary correction from this long bubble. The Fed is going to go in there and try to do everything to prop up Wall Street. They're now floating the idea of the Federal Reserve buying stocks and exchange-traded funds. If that happens, we'll join Japan in trying to prop up our stock market. So we're in a dangerous period financially, because the Federal Reserve and the federal government are not giving us a free market economy. They're giving us a managed economy out of Washington, D.C., with more spending, regulations that I give the president credit for by reducing regulation. That was one of the best things he's ever done as a president, is reduce regulation. Unfortunately, the Federal Reserve has been manipulative of that. Is 3 bubbles in 2 decades: the dot-com bubble, the housing bubble, and now the everything bubble that's burst. And so the question is this the bubble that will be the biggest bubble of all time? Remember, the biggest bubble was 1929 to 1932. The market was down 89% in 3 years. I don't think it's going to happen now. It could. No one knows the future. As someone said, prediction is hard, especially about the future. And that's why I'm concerned about what the Federal Reserve is doing. I've been writing to the world economy. I believe the Federal Reserve is an existential threat, and central banks, because what they're doing is destabilizing the economy by giving us booms that are unsustainable. And then we have these terrible busts which cause so much pain in small businesses and households around the country.
So, Doc, let me ask you this. You were here a little earlier in the green room waiting to come on. You saw I put a chart up there.
Yeah.
My background comes from the short side, so I'm always looking at it from a short seller's perspective. I recommended to people last Friday, if anything, to go into the weekend short. and that proved to be kind of prophetic because we opened
Sure.
down 2,000 on Monday. And now when I look at the technicals on this market, I feel like the next place that could be some support is around 18,000, which would bring us to like a 40% drop
Right.
from the highs of like 29 and change.
Right.
Is that the bubble, or do you think we can go back down to the lows of 2008?
If we go back down to 2008, there'll be not only panic in the streets, I think there'll be riot in the streets, because we're talking about that'd be about a 75% drop.
Right.
I don't think the American people can handle it. Their IRAs, their 401ks would be absolutely decimated. So again, this is what happens when the Federal Reserve creates bubbles, is that people's expectations reach incredible levels because they see their 401k has gone through the roof. But we know what goes up sometimes comes down. In this case, it comes down very hard in the stock market. And unfortunately, President Trump hitched his wagon to the stock market. So when the market goes up, he took credit for it. Now that the market's gone down, he hasn't said much about it. And so he's lucky that this is not October of 2020 instead of March of 2020.
Right. Well, maybe we get it out of the way now, and then we figure out what the real deal is with this corona stuff. And, you know, at these levels and even a little bit lower, there are probably some generational buying opportunities for people to get into good, strong blue chip names.
Well, one of the smartest guys around, Warren Buffett, is sitting with $130 billion of cash on the balance sheet of Berkshire Hathaway. So he knew something about this market, that it was very overvalued, and that's why he's kept a lot of the assets of his shareholders in cash rather than going out and buying overvalued stocks.
Well, that's Dr. Murray Saber, and if he says it, you better be listening and taking notes, because he knows where all the bodies are buried, especially in the Fed. And Trump may have hitched his wagon to the wrong market for now, but we'll keep our eye on that. Doc, thank you so much
Thank you,
for
John.
joining us. Really appreciate it.